Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM, your top 3 market points of the week. And we're talking earnings this week. So without further ado, let's just dive right in on your top 3 companies of the week. Kicking us off at number 3, it was Netflix, falling after announcing their quarterly earnings. Now, Netflix did beat on a lot of their headline metrics. However, there are growing concerns from investors about their amount of spending that they are having to do, especially CapEx-wise, around this Warner Brothers Discovery acquisition, as well as the amount of content that they're going to be buying in 2026. I think that number has been ramped up by about 10% on top of the $82 billion that they're planning on spending for Warner Brothers, which has now been made into an all-cash offer. Now, once again, this is going to scrimp on near-term profitability, but the underlying fundamentals of Netflix still remain strong. They've got a strong content slate, subs going up, pricing going up, and advertising continues to grow. At number 2, it was Abbott Laboratories falling over 10%. That was their largest one-day decline since 2002. Now, a lot of this comes due to the fact that they have had to come out and issue a weaker than expected forward-looking profit guidance, in addition to then having to also offer discounts and promotions for their baby formula to entice price-sensitive shoppers. Now, on the underlying side of things, their medical sales and devices segment is still their biggest and strongest, and that did meet expectations, growing around 12% year over year, as well as their adult nutrition segment also showing some growth in recent quarters. And then finally, point number 1, it was Intel falling close to 13% after announcing their quarterly earnings. So pretty severe drop for Intel here, as they are in the process of a multi-year turnaround. Now, the issue with Intel here is the fact that they have come out and said that demand for their chips is very strong, but they are running into manufacturing capacity constraints and snags on that. So they will not have the additional yields and supply to meet this demand. And that's not really something you want to hear from a legacy chip maker that has continued to kind of lag industry peers in recent years and trying to get back to their technological edge. Now, they did come out and say that while that demand side of their chips is very strong, they can't just pivot into it full sail, because that would then hurt their computer and personal computing segments as well. So they're kind of between a rock and a hard place here. So like I said, not really something you want to see in a multi-year turnaround plan. Now, that does it for your top 3 names this week, your top 3 points this week. What are we checking out for next week? Well, there's going to be more earnings, but also we're checking out the Fed rate decision next week, and we will keep you posted there as to what they decide. Right now, it's looking like they are pricing in not cutting rates at this upcoming cycle, but that could change in the next week or so. Now, that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the written weekend review. And if you do not have a financial advisor, please follow our link and we're happy to get you connected with somebody. But as always, please go out, enjoy your weekend, try to stay warm this week as that winter storm rolls through, and we will see you the same time next week. Thanks again.